Welcome back, guys, to another video on taxation. So today I'll be discussing on basis of assessment. So the text on our screen says basis of assessment refers to the period or method used by tax authorities to determine which profits or income are taxable in a specific year of assessment. Now, in our text, they said tax authorities like the FIRS in Nigeria. Now, since this video is on the basis of assessment of the Nigeria tax law, not of any other country's tax law. So basis of assessment refers to like how can the tax authority place tax on the profit of businesses. This is what basis of assessment is talking about. And also it tells us what accounting period should the government place tax on. We have the types of assessments in Nigeria. We have the actual year basis, we have the preceding year basis, we have the commencement rule, we have the cessation rule, and the change of accounting date. As you can see on the screen, actual year basis is taxed on the profit you earn in the same year. Now, what actual basis is talking about is if, as a businesswoman, you did a business from January to December, the profit you made at the end of December, let's say 2023, is taxed on that profit that you made in 2023, not the previous year. If you did a business this year and during the end of this year, the profit you made is taxed by the government. That is actual year basis. Preceding year basis are taxed on the profit you earn in the previous year. Now, what I mean is, if you are if the profit you made in 2022 is being taxed by the government in 2023, which means that the government taxed the profit you made in the previous year, not in the actual year or in the current year. That's for preceding year basis. Now, due to some certain factors like commencement, change of date, cessation, it has made it difficult for tax authorities to place tax on the profits made by different businesses. In order for the business not to escape from tax, the tax authority or the government decided to create a commencement rule. Now, this commencement rule was created from the Finance Act. We have the old commencement rule and the new commencement rule. Now, the old commencement rule was enacted in the year 2004, while the new commencement rule was the amended Tax Act. So I'm going to be treating both rules, both the old commencement rule and the new commencement rule, for a better understanding of basis of assessment when it comes to dealing with commencement rule. Now, the reason why I'm doing both is because most students find it difficult to comprehend or understand or differentiate why a particular solution to a question is very different from another solution when it comes to commencement rule. Commencement rule states that a business is assessed in the first 3 years of commencement. In the first 3 years of commencement, both in the old and the new commencement rule of the Nigeria Finance Act. So let's focus on the old commencement rule. So in the first outline on our screen, which is the first year of assessment, I said the commencement rule is being assessed, that is, the profit of a business is being assessed in the first 3 years of the business. So the first year of assessment, the basis of assessment in the first year of assessment is usually from the actual date business commenced to 31st December. That the first year of assessment ends from any calendar month that a business commenced from up until 31st December, irrespective of the accounting year end of the business. That's for the first year of assessment. Now, for the second year of assessment, the basis period for the second year is the first 12 months of trading. Now, what this means is from the commencement date up until the accounting year end of the business. So the government is going to assess another tax from the commencement date up until the accounting year end of the business. Now, the third assessment here in your screen says is the preceding year basis of assessment. Now, I explained preceding year basis that preceding year basis is taxed on the previous profits made on the previous year. Preceding year basis, as I've explained earlier on, is the profits of last year that is being assessed in this current year. Or let's say the profits made in 2023 that is being assessed in 2024. That's preceding year basis. Now the new commencement rule, which is what is being used now, like currently now, which is what is being used currently till date. So as I said earlier on, I said in commencement rule, you are assessing the company's profits for 3 years. So the first rule says for the first year, the assessable profit shall be the profit from the date in which it commenced to carry on such trade or business in Nigeria to the end of its accounting period. So this new commencement rule, it deals with if a business commenced in April 1st. So which means the first basis period is going to be from April 1st down to 31st March, which is a 12 calendar month, which is a 12 accounting period. Then the second year of assessment is now going to begin from that 1st of April down till 31st of March. Now, when I mean down to 31st of March is if the business commences from April, 1st of April, and decides that its accounting period end is going to be March 31st. So it's just like this new commencement rule deals with the actual basis, just like from the commencement date down till the period end. Commencement date down to the period end. That's what this new commencement rule of 2011 is about. So this is an illustration. ABC Enterprise commenced business on 1st of August 2022. Its accounting year end is 30th of June. The following were the adjusted profits. The first was from August down to 31st of June. Second was 1st of July down to 30th of June. While the third was 1st of July down to 30th of June. Now I said we're going to be using the old and new commencement rule. Now for the old commencement rule, it started from 1st. The rule of the old commencement rule says that from the commencement of any trade down to 31st of December. So which means that the old commencement rule is going to start from the year of assessment is going to be from 2022. The year of assessment is going to be from 2023. What date they commenced? They commenced 1st of August 2022 down to 31st of December. Now what happened in that period? From 1st of August to December. Now let's calculate from August to June. How many months do we have from August down to June? So we have 11 months, which means 11 months. Then from August down to December is 5 months, which is going to be 5 divided by 11 months multiplied by, what's the time around 1.8 million. So when you punch your calculator, you're going to have 818,182 naira. The second year of assessment, which is 2024. The second year of assessment in the old commencement rule states that from the date of commencement down to 12 months, which is going to be 1st of August 2022 down to 31st of July next year. It's going to be from August 2022 down to 30th of June 2023. He had a profit of 1.8 million. But you know that was 12 months. So which means we need a month to make it 12. So now the second year of assessment will be 12 months period. So which means that the profit made in the first period, which was 1.8 million, you add it up from the result you got when you take a month in the second profit, which is 1 divided by 12 multiplied by 2.4 million. When you add 1.8 million to the result you got when you divide a month from the total month, which is 12, by 2.4 million, you're going to have 2 million. I know you are confused on this second year of assessment. Now, this second year of assessment states that from the date of commencement to 12 months, once you must count from August, it's going to end in July 31st, the next year, which is 1st of July 2023. So which means from 1st of August 2022 down to 30th of June, it has already covered the whole 1.8 million, but it's not up to 12, it's just 11 months. So you are going to take the remaining months from the next adjusted profit, which was from 1st of July down to 30th of June. The next adjusted profit was a complete 12 months. So you have to take one out of it to complete the second year of assessment. That's when you are using the old accounting, the old commencement rule. That was what we did. Added the 1.8, which was the first adjusted profit, with a month out of 12 months of the second adjusted profit, which was 1 divided by 12 multiplied by 2.4 million. So when we added it, we had 2 million naira. The third year of assessment is going to be from 1st of July down to 30th of June. The third year of assessment, you begin from 1st of July down to 30th of June to get, that's how you get the third year of assessment. So the moment you get your third year of assessment, the other years begin to follow up that pattern. The third year of assessment, which was from 1st of July 2023 to 30th of June 2024, was 2.4 million. So you don't need to compute anything. So just write your 2.4 million. So you are done with the old commencement rule. So let's say when you are using the old commencement rule, they said the taxpayer is entitled to a right to election. Now, the right of an election begins in the second year of assessment. So what's the second year of assessment? It was 2024. The basis period, as I said earlier now, is going to be from 1st of January down to 31st of December. That's how right of election is being computed. So 1st of January down to 31st of December 2023. So the only adjusted profit that began from 1st of January 2023 was in the first adjusted profit. which means from 1st of January to 30th of June, that's 6 months, divided by 12, no, that's 6 months divided by 11, since the first adjusted profit was just 11 months. So you divide 6 by 11, you divide 11 by, you divide 11 months by 6, then multiply it by the adjusted profit for the first, you multiply by the first adjusted profit, which was 1.8 million. Then you add it up to the second adjusted profit, which began from 1st of July down to December. You know, the second adjusted profit began from 1st of July to 30th of June, but the right to election is from 1st of January to December. So the second adjusted profit is going to continue from 1st of July down to December, which is 6 months, divided by 12 months, multiplied by the adjusted profit for that year. So which is 6 divided by 11, that's for the first adjusted profit, then multiplied by, what was the amount? First adjusted profit, the amount was 1.8 million. Add it up to 6 divided by 12, then multiplied by 2.4 million. The adjusted profit for the second year, we're going to have an accessible profit of 2,181,818 naira. So you go ahead to the next, the third assessment, year of assessment. The third year of assessment, which is 2025, is going to begin from 1st of January 2024 down to 31st of December 2024. So 1st of January 2024 began from second adjusted profit. So 1st of January down to June, it was six months. Then you continue from the next adjusted profit, which was from July 2024 down to December, which is 6 divided by 12 times 2.4 million, in addition to 6 divided by 2. You're going to have an accessible profit of 2.8 million. So that's all for old commencement rule, where we apply the right of an election, but in a case where the taxpayer is not entitled to the right of election, you are not to prepare any right of election. Or in a case where the taxpayer is entitled to a right of election, that's when you are required to compute the right of an election. Now, this right of an election allows the taxpayer to know how high is his income or how high is his accessible profit, because this gives the taxpayer the right to pay to have a lower accessible profit in order for him to pay a lower tax. So we'll dive into the new commencement rule. If you look at our question, the new commencement rule states that from the date of commencement down to the accounting year end. If you look at our question has the exact whole of the new. Our question has the exact new commencement rule. The business commenced in 1st August 2022 and the accounting year end was 30th June. Then the second year of assessment in the new commencement rule begins the next day after the year end of the previous year of assessment. So which means you just get from August to 30th of June. You begin from July to June. Begin from July down to June. The first year of assessment was 2023. Basis period was from 1st of August 2022 down to 30th of June 2023. You don't have to do any calculation. because the value has already been given already. So you just show 1.8, right? Show 1.8 million. Then you forward to the next question, which is 2020. The next year of assessment, which is 2024, which the day after the day after 30th of June is 1st of July. 1st of July 2023 down to 30th of June 2024. So the value that was given was 2.4 million naira. What was the third year of assessment? 2025, which was from 1st of July down to 30th of June. The value there was 3.2 million, done with commencement rule of both the old and the new, going to change of accounting dates, which is another type of basis of assessment. Before we continue with change of accounting dates, if you have any questions on the previous illustration, that we did, do well to comment, do well to ask those questions on the comment section. And if you are not following, please follow this channel. That you'll be notified on any new videos that will be uploaded. And also, if you love the session, you can like the video. Change of accounting dates. Now, change of accounting dates is when a company decides to change its normal accounting year-end period to another accounting year-end period. It can be that as a businesswoman or as a businessman, you have a business and your accounting year-end is always 31st of July. That's your accounting year-end. They now decided to change it from 31st July to 31st of October. This is change of accounting date. Now, this change of accounting date has a rule that applies to it. Now, the first rule states that you must determine the year of assessment in which the company fails to make up accounts to its normal year end. And what this means is that you must take note of the time that the company decides not to be using its normal accounting year end period, and that particular time that they changed from the old accounting period to the new one that they want to be using. That is, after you have took note of the particular time that the organization changed its accounting year end from the old one that they are using to a new accounting period, you must now make a 2-year assessment after that particular period. Number 3 says compute the assessable period for the 3 years of assessment. As you compute after you have noted the period in which they have changed from the old accounting period to the new one, then the other 2 years of assessment following that period, you must be able to calculate the profit that each of those period has. And also, you must also calculate it using the old one and also the new accounting date. That is, after you have kept note of the period that they were using that they changed from the old to the new, that period following the next 2 years following, you must use the old one to compute the assessable profit and also the new accounting period to compute the assessable profit of the organization. So when you compute it with the old basis and with the new basis, you add up all the 3 assessments together. So when you add up these 3 assessments together, the tax authority will charge you based on your assessable profit, like the highest assessable profit between the old basis and the new basis that you have computed separately. So we're solving an illustration to practicalize these rules of change of accounting dates. So the question says Delta Tech Limited. You can pause the video and take note of these questions. So Delta Tech Limited has always prepared account on 31st December. However, it decided to change its accounting year end to 30th of September in 2024. To compute its assessable profits, you look at our question: at what particular year did the accounting period changed? 1st of January 2024 to 30th of September 2024. Now, this was a particular year that the accounting period end changed. We are sorry for the old basis. Now, since the accounting year end changed from January, so which means that the old basis, we are going to use the year end of 2023, which was 5.4 million naira. So which means from January, year of assessment is 2024, 31st of December 2023. What was the profit in 1st of January to 31st of December 2023? It was 5.4 million. Year of assessment 2025, which is the same basis period, 1st of January, 31st of December 2024. What happened? And if you know that 1st of January 2024 down to December, we only had a 9-month period, which is 1st of January to 30th of September. So which means it's going to be 3.6 million. That's from January to September was 3.6 million. In addition to, from 1st of January till 30th, it is not up to December. How many months will make it to be up to December? That is October, November, December. Where are you taking it from? You're taking it from the next year. The next year, which was the 2025, if we take 3 months out of it, it's going to be 3 divided by 12 multiplied by the amount, which was 4.8 million. I know you'll be confused how I got the 3 months, how I got the 3 divided by 12, but don't worry, I will explain. So from January to December, which was the 9-month period to September, we had 3.6 million naira. Then that was the date that it ended, which was 30th of September. So a new date began. That was when they started using the new accounting period, which was 1st of October 2025, which was 1st of October 2024 down to 30th of September 2025. And you know that during our old basis says 1st of January 2024 down to 31st of December 2024. We have used up 1st of January to September. What remains? 1st of October down to December. Now 1st of October down to December continues in the next adjustable profit, which was 4.8. That's the reason why we counted from October, November, December, which was 3 months, divided by the full months in a year, which was 12, then multiply it by the adjustable profit, which was 4.8 million naira. We are going to have 4.8 million. So you move ahead to the next, which is 2026, the same year basis period, which is 1st of January 2025 to 31st of December 2025. The second to the last adjusted profit, which is 4.8 million, which was year end 31st December, and we got 4.8 million. We have used up 3 months out of it. It will remain 9 months, which is 9 months divided by 12 times 4.8 million. Then add it up to the next period, which is 3 divided by 12 multiplied by 4 million. Since you are working with the old basis, which is from January to December. So which means that we have used up 3 months in 2024, but you are in 2025 now. So since you are in 2025 now, which means it's starting from January. Now the January is going down to September, which is 9 months, divided by the full month, then multiplied by the amount, then add it up to the 3 months you took from that next, the 3 months you took from the last adjustable profit, which was the year end 31st December 2026, which was 4 million naira. So once you use 3 months out of 12 months, multiplied by 4 million naira, you're going to, which is going to be 9 months divided by 12, multiplied by 4.8, which is going to be 4.6 million. Since you have computed the 3 years assessment, then you add up all the accessible profit that you got. So when you add up 5.4 million to 4.8 million to 4.6 million, you're going to have 14.8 million. So which means that the total accessible profit for using the old basis was 14.8 million. So the next thing we're going to do now is to use the new basis. Since we have used the old basis, and we need to use the new basis. So using the new basis, what date did it? So year of assessment is 2024. Basis period is going to be 1st of October, 30th of September 2024. What happened during those periods? The 3 months that I said you take from the adjustable profit of 2023, divided by 12 months, then multiplied by the adjustable profit of 2023, which is 4.8 million, which is 5.4 million naira. Then add it up to the 9 months period, which is 3.6 million. When you calculate it, you're going to have 4,950,000. So you go to the next year of assessment, which is year 2025. What happened in year 2025? You go to your question. They say year end of September 2025. So which means it's going to begin from 1st of October 2024 down to 30th of September 2025 to make your 4.8 million naira. So 1st of October 2023 down to 30th of September, the assessable profit was 4.8 million. So you don't need to calculate anything. 4.8 million. So 2026, which is 1st of October 2025 down to 30th of September 2026. So when you add up all the accessible profits for all the relevant years of assessment, it should give you 13,750,000. So if you compare the old and new basis, which is higher, the old basis that is higher, so the tax authority is going to tax you on the old basis because the old basis has the highest accessible profit. If you have any question on change of accounting date, commencement of new business, or commencement rules, or any question at all, do well to ask those questions on the comment section. And if you have not been following this channel, please do well to follow the channel, like, subscribe. So move ahead to the last type of basis of assessment, which is cessation of business, or the cessation rule. Cessation. Cessation is when a business permanently ceased to exist, whereby a business is no longer in existence. That is cessation. So in a case whereby a business ceases to exist, that business must pay the tax for the profit it got after it was seized. or after it stopped a trade or business. So the rules is that the assessable profits from the beginning of the accounting period to the date of cessation, that is what is computed. Just like when you get the preceding year basis, you now get the date of cessation after the accounting year end of the business. From that date up to when the business ceased to exist, that's until when the business ceased operations, that is what is recorded. So do an example on it so we'll have more idea on what cessation rule is all about. So this is illustration 4. You see Oasis Limited commenced business on 1st January 2019 and ceased operation on 31st August 2023. It prepares accounts to 31st December each year. To calculate the tax liability of this business that ceased operation on 31st August 2023, what we're going to do is at what point did the business ceased operation? It was from 1st January to 31st of August. That was when it ceased operation. The year before it was what? Year ended 31st December 2023, which is 5.1 million. So what you're going to record now is the preceding year basis, which was 31st December 2022, which is 5.1 million naira. Then you now record the cessation period, which was 1st of January 31st of August to 31st of August 2023. Then you add the amounts. That's how to compute cessation, how to practicalize cessation rule to get the tax liability of a business. So the year before the cessation date was the year of assessment. Year of assessment of 31st December 2023 will be 2023 year of assessment. What was the period? It was from 1st of January to 31st of December. So 1st of January to 31st of December 2022. We don't need any computation. So the assessable profit from 1st of January to 31st December 2022 is 5.1 million. Then in 2024, that is the cessation date. Was the year of assessment 2024. It was from when 1st of January to 31st of August 2023. So what was the amount? 2.4 million. So this is the cessation rule of 2011. So to get the cessation rule, to calculate the cessation rule for 2004, what you're going to do is you calculate the preceding year. That's the normal accounting year that the business is using. Then you calculate the actual period, which is always from January down to December. So any of which that is greater, that is, I'm talking about the 24 cessation rule. Any of which that is greater, you pick it. That's what you take. If it's the preceding year basis that is greater, you take the preceding year basis. But if it's the actual year basis that is greater, you take the actual year basis. Then you now compute your cessation date, which is from the beginning of the period down to the day that the business ceased operation. That's how you practicalize the cessation rule of 2004. Thank you for your time, your attention, and if you have not subscribed, please do well to subscribe, like, comment. In case you have any question, do well to do that on the comment section. You can also turn on your notification icon to get to be notified on any new videos.